Welcome to the channel. Today we're diving into one of the most important skills in real estate. It's how to find the right deals. Whether you're a beginner or seasoned investor, understanding where to look and what to look for is essential to building wealth through real estate. Make sure to like, subscribe, and hit the notification bell so you never miss an actionable tip. First, we're going to go over understanding what makes a deal. The first step is understanding what is the right deal. Not every property with a low price is a good investment. A deal is right when it meets your financial goals, risk tolerance, and long-term strategy. You got to ask yourself, will this property generate positive cash flow? Does it have potential for appreciation? Are there any hidden repair costs that could eat into profits? Always remember to know your market. Before you even start with looking for any deals, the first thing you want to do is know your market. Research is key. Look for areas with population growth. More people mean more demand. Job opportunities equals strong employment, which drives rental demand. And development projects. You got to look for up and coming infrastructure that can boost property values. Use online tools like Zillow, Redfin, or local property records to track sales trends. Attend local real estate meetups or connect with experienced investors. Being familiar with neighborhoods will help you spot undervalued properties before they hit the mainstream market. A few things to consider when finding deals. There's several ways to find great deals. Let's go through the main ones real quick. The first one's the MLS listings. The multiple listing service is where most properties are listed. You can filter by price, property type, and days on the market. Properties sitting for a long time may be more negotiable. I always look at foreclosures and auctions. Banks want to sell these quickly, often below market value, but make sure you calculate repair costs and legal fees. Third, off-market deals. These are not publicly listed. Connect with property owners directly, attend networking events, and use marketing campaigns like postcards and online ads. Fourth, wholesalers. Some investors specialize in finding properties and selling contracts. While it can save time, always verify the property's potential before buying. Remember, consistency is the key. The best deals often come to those who are actively searching and not waiting around. Next, we're going to talk about analyzing deals. Once you find potential properties, you must analyze them carefully. Focus on cash flow, appreciation potential, and risk factors. First, let's talk about cash flow analysis. Calculate rental income minus expenses like mortgage, taxes, insurance, and maintenance. A positive cash flow means your property earns more than it costs to hold. Next, talk about cap rate real quick. Always divide your net operating income by the property price. This shows the return percentage you can expect. Higher cap rates usually indicate better income potential. And finally, comparative market analysis, CMA. Look at recent sales in the area to understand fair value. Don't overpay based on emotions or urgency. A quick tip is to use spreadsheets or real estate software to compare properties. A deal that looks good on paper but fails in practice is still a loss. Next, another very important thing is negotiation strategies. Finding a deal is one thing, closing it at the right price is another. Effective negotiation is a critical skill. Start below your target price to leave room for compromise. Highlight any property flaws or repair costs. These can justify your offer. Be ready to walk away. Emotional attachment can lead to overpaying. Remember, the seller often wants a smooth, fast transaction, so flexibility on closing dates or other terms can help you get the property at a better price. Next, always remember financing your deals. Securing financing is part of finding the right deals. A few options: conventional loans are good for long-term buy and hold properties with solid credit. Hard money loans are good for short-term loans, often used for fix and flip deals. They have higher interest, but there's faster access. Next, we've got partnerships. Combining resources with other investors can reduce risk and increase buying power. Always factor financing into your cost analysis. The right deal isn't just about price, it's about profit after financing. And last, always do your due diligence. Before finalizing a deal, conduct a thorough inspection of everything, run through the numbers twice. Very big: measure twice, cut once. A few other key things to remember: inspections, check the structure, the roof, plumbing, and electrical systems. Hidden issues can ruin cash flow. Title search, ensure that there are no liens, unpaid taxes, or legal disputes. And as far as neighborhood assessment, always drive through the area at different times. Look at crime rates, noise levels, and overall condition. Due diligence is your safety net. Skipping this step can turn a profitable deal into a costly mistake. The most successful investors have systems for finding deals. Maintain a list of target neighborhoods. Use alerts on real estate platforms to notify you of new listings. Track your offers and follow-ups. Treat real estate investing like a business. Consistency and organization allow you to spot opportunities faster than competitors. And finally, finding the right deal is about more than instant profits. Focus on long-term wealth creation. Reinvest profits, diversify property types, and continue learning. Real estate is about consistency over time. Patience, discipline, and knowledge of your local market will pay off over time. This video, there's several keys to remember. We tried to cover most of the topics today that are important to investing correctly. If you have any questions or comments, feel free to leave in the comments section below. We'll be more than happy to answer. But it's once you identify a strong market, that's probably one of the first keys. Second, we have neighborhood level analysis. Also building an inclusive and reliable network. Deal metrics anyone can learn. Cash on cash, cap rate, ARV, extremely important. rental income and expense analysis using public data. And next, we have due diligence that protects you. How to negotiate clearly and fairly. Direct to seller strategies. Community and networking and local meetups. The power of preparation. Why consistency wins in real estate. So those are the key things in this video. If you have any questions on any of these, we can discuss more in depth. And just feel free to message us at joshsloserinvestments.com or send us a text or call us by phone. It doesn't matter. We'll be more than happy to discuss anything that you have going on with real estate. Feel free to call us between 9 and 5, Monday through Friday. I hope everyone has a great weekend. We'll see you back here next week.